Auditing. So Dice Limited approve upon 2 CE, MN Associates and PQ Limited and the joint auditors are the conducting audit for the 1 year, 31st March. In the course of the audit, it has been observed that there were understatement of the value of inventory. The inventory valuation work is looked at by the MN Associate, but there were no documents for the division of the work between joint auditors. So comment on the above situation regarding the responsibility of joint auditors. When the work is given to joint auditors, both of them are responsible. Only the work of one auditor can be clarified or one auditor can be justified. Only he has the audit working paper and it has been agreed upon a joint auditors. If not, every work to be responsible for joint auditor itself. So as it say 299 joint auditor of the financial statement where the joint auditors are appointed, they should be mutual under discussion divide the work among themselves. The division of the work would be the terms of audit of identification upon the specified areas. In some cases, due to the nature of business and the entities under the audit, some divisions of work it may not be possible. In such a situation, the division of work may be deferred to the items of assets and liabilities or incomes and expenditures. Certain works owing to the importance or owing to the nature of the work involved would often not be divided, would be covered by joint auditors. The documentation allocation of the work helps avoidance any disputes and confusion which may be arising in the joint auditors regarding the scope of the work and carrying out by them. Further, the communication of the allocation of work to the entities help the avoiding any disputes or confusion which may arise between the entity and the joint auditors. In the present case, in the case M and Associates and PQ, PQ and Q Co are appointed as the joint auditors of the DICE Limited for the audit of the year under 31st March 2019. It is the inventory valuation. There is a major understatement, and the valuation of inventory work looked after Yaman Associates. There was no documentation to divide the work between joint auditors. So, if by any of the document is evidence to provide that the valuation of the inventory is allocated to Yaman Associates and Yaman Associates shall be responsible for the same. Otherwise, Yaman Associates and PQ or both the joint auditors will be jointly and severally liable. அவ்வளோதான் நான் சொன்ன மாதிரி you're jointly severally liable. MS and Kumar and Co. Chartered accountants were appointed as a statutory auditor of PC Limited with the financial year 2021. During the course of the audit, one of the partner CA, Kumar observed that there is a misappropriation of asset in the forms of theft in entities inventory and perpetuity of this employee is relatively small and the immaterial amount. CA Kumar concerned that existence of certain circumstances for increasing susceptibility of assets is in appropriation. Guide CA Kumar with respect of risk factors relating to the statements arising from the misappropriation of assets with reference to the relevant standard of auditing. In the case of CA Muthukumar, hmm, so he had found that there is an inventory has been mishandled. He's saying it's immaterial, but it's a responsibility of the management to prevent and control the internal, make the internal control sufficient. There is more material statement in the financial statement and in the organization. And if the auditor is able to find some fraud, it's a responsibility of the auditor to report to the management. The management should get given proper response to it. And even though the materiality of the amount is much and very less, if the auditor thinks that it should be relevant, he can use in the notes of account, notes of his report. In the case of CA Kumar, who is the partner of the audit firm, observed that there is a misappropriation asset in the form of theft and entities inventory is a perpetuality of the employees relating to small and immaterial amount. He is concerned that the existence of certain circumstances increasing susceptibility of asset to misappropriation. So, SE 240, audit responsibility relating to fraud and audit of financial statement related to risk that rate of misstatement arising from the misappropriation of asset also clarified upon the three conditions generally presented when the fraud exists: incentives and pressures, opportunities and attitudes. Incentives and pressure. The personal financial obligation may create a pressure on management or employees This access to cash or other assets, susceptibility to theft and misappropriation of the asset. Adverse relationship between the entity and the employees with the excess of cash or other assets susceptibility to theft may motivate the employees to misappropriate this asset. For example, the adverse relationship may create the following: known and unanticipated future employees layoff, recent unanticipated changes to employees' compensation or beneficial, promotion, compensation, other rewards inconsistent with the expectation. Opportunities. Certain characteristics or certain circumstances may increase the susceptibility of assets and misappropriation. For example, opportunity to misappropriate assets increase when there is a following: large amount of cash in hand or proceeds, inventory items that is small in size, high value, and high demand, easily convertible assets such as beer, bonds, diamonds, computer chips. Fixed assets such as small in size, markable, lacking observable identification ownership. Inadequate control of the assets may increase the susceptibility of misappropriation of assets. For example, misappropriation asset may occur because it has been follows: inadequate segregation of duties and independent check, inadequate oversight of senior management such as travels and other reimbursements. Inadequate management oversight of the employees responsible for assets. For example, inadequate supervision of monitoring of remote location. Whoever want to monitor remote location, they may not even see what are the asset being used, what are the asset that been where is in proper condition, who is using it. Nobody will check. This circumstances we have seen in the CAG report of Tamil Nadu, where the fire department is using the motor vehicle as a personal vehicle. Inadequate job application screening of the employees' access to the assets. Yeah, inadequate record keeping respect of assets, inadequate system of authorization and approval of transaction, for example, in purchasing, inadequate physical safeguard over cash inventory, inventory investment fixed assets. You can see this new movie has came over where the bank manager is taking the cashes because of the inadequate security. A lack of complete and timely recognition of asset, lack of timely and appropriate documentation of transaction, for example, credit and merchandise return. Lack of mandatory vacations of the employees performed key control function. If the employee has been kept there for a long time, he may have the control over the system. So he should be given a mandatory leave. Inadequate management understanding of information technology enables information technology employees to penetrate misunderstanding. A recent news has happened. What happens? A person not knowing this information technology being misused by his friend and taken his cash and even killed him. Inadequate access control over automated records, including control over review of control systems and event logs. Attitudes and rationalization. A disregard of the same disregard for the need of monitoring and reducing the risk related to the misappropriation of asset. And discredit the internal information over misappropriation of asset by overriding existing control or failing to take appropriate remedial action to known deficiencies in internal control. Okay. Yeah, there is some problem, but there is no remedial action. Example, um, they know there is no CCTV cameras in that area, or the CCTV camera is there, but it's not working. If it be in this case and not able, no one is ready to rectify some issues, that may leads to some misappropriation. Behavior indicating displeasure or dissatisfaction with the entities or a treatment of its employment. Change in the behavior of a lifestyle to make indicate assets where which means separate. Tolerance of petty thief. In the course of audit of Tech Limited to observe proceeding of an accounting data or given to third party on account of certain consideration of cost reductions of own computer measures of full capacity. Okay, and the Tech Limited uses service organization to record the transaction and process the related data. They're using the service of the service organization. As an auditor, what do you do? We require a consideration regarding the nature and extent of activities undertaken by service organization, so as to determine whether these activities are relevant to the audit, and if so, the assets assess their effect of audit risk. Discuss the reference to the standard of auditing. Yes, say 4 or 2. Service provided by service organization relevant to an audit. What happens is the company may have don't have the sufficient resources to do some activities. They may outsource the activity. What happens? These so now our focus is to see what are the control that is in the service organization. That is how the data is been given to them, how it has been safely performed. That is, such data should not be leaked. First point. Second, again, such data should be properly recorded, supervised, and then after such kind of report we should read. should get done. How the service organization providing the quality, how does they maintain the higher quality and higher efficiency for our work? What is it designed to prevent any misappropriation? What they do, that is the thing. Service provider, service organization that relevant to audit users entities financial statement when the services of the control over them. As part of this is a users entities information system including related business process relevant to financial reporting. Although most controls of service organization are likely to be rebate in the financial reporting, there may be other controls that may be relevant to the audit, such as controls over safeguard of assets. The mainly thing is our asset is data. If some cases the service organization may get some missionaries from the main the company and do some work and then return back. That is kind of offload working, offline working, or we can say this it's going for packing or a specialized activities being done. Example in the diamond industry, the diamond will be polished by one person because they don't buy the diamonds that has been imported to India. It's been polished in Surat. Then after it's been returned to that respective country. The only thing here is done is polishing, outsourcing the work. The countries think so. Then India and Surat, this area where we can get a cheap labor, so they are sending the diamonds here to polish because we have skilled cheap laborers in there. Such a ways, then you see how they do the audit. They will see what the service center control, how they securing the asset. How Indian government has provided separate center for them. So this log is being provided for every diamond. Every diamond is being micro printed with some kind of barcode. So it if it even been sold out in the market, we can when we find out we can find out such a way. The service organization service part of the entity's information system, including related service process relevant to financial reporting in the service affected by the following. In the class of transaction in the user entity's operation that is significant to the user entity's financial statement. In the procedure for both information technology and manual system, it is where the user's entity transactions are initiated, record are processed, correct and necessary, transferred to the internal ledger and reported to the mentioned statement. Related accounting records either electronically or manually for supporting information specific accounts of the user entity's financial statement that uses initial records process report the user entity's transaction. This include correction and incorrect information, how the information is transaction transferred to the general ledger, how the user entity information system captures events and conditions other than the transaction. That is a significant to significant significant statements because some data has been given to them. So they get the data, they enter the data, they re-verify the data, they post it to the general ledger, and then it comes to trial balance. Then we get the trial balance. We file the financials. So the question is how well this data has been incorporated. Is there any error? Is there how it is being followed? Such a question will arise. The financial reporting process is used to prepare the user entities of financial statement, including significant accounting estimates and disclosure. So yeah, the end as far as the accounting concern, fixed asset should be in WDV method or straightened method. First, inventory, what valuation you are doing. Intangible assets, when how it's been amortized, what is the percentage is of that. Example, then bonus. What is the computation? What is the percentage you have as per the standard rate? 8.33% as per the what's the rate you have in PF computation. Have you included the basic basic salary, dearness allowance, and other allowances, or only those two things? And how you computing everything depends upon assumptions, and that is mean of accounting estimates and disclosures are required. How they are dealing with it, that's important. Control surrounding journal entries, including non-standard journal entries, used to record non-recurring unusual transactions adjustment. So they may not post because it's a service organization. They have the control of accounting. And now what happens is the account. It's an example. You see, they have hundreds of thousands of transactions per day, but they can't go and verify each and every transaction. If at all the case they bought into some client, they know some clients and they had idea of increasing the liability. They even increase in fictitious transaction. The payment accounts department doesn't know because the sales department is all over the world. They may create in this state this sale has been done to this person. This amount is pending to them to pay. If they make the payment and the service organization made the entry, the finance department thinks, oh, it will happen. Okay, no problem. We will make the payment. They will make the payment. So this is a greater issue. So the service organization to be audited, how you have the control, how you do the, how much data you get, from where you get it, how you know that this data is correct or wrong, how you post the entry, do you have external confirmation, you how many times you have sent this every department you received some invoices, how do you correct it, how you verify it? That's a question. After posting it, you send to the general manager, some managers in the division level send to them. Well, they will check it out. Okay, and as per the invoices, what are the entries are correct? Who is checking it? And are you even checking in your own? How I am making this? Who is making the PF payment? What is, if the interest payment is there for PF payment, whether late payment, late fees, then the total payment made on the day will be, sorry, ESI payment made on the date will be disallowed. Late fees payment, late payment of ESI is disallowed. Who is responsible for that? Even though they made a late payment, they are accounting it properly. What happens? Yeah, GST to be paid, GST to be filed in GSTR 1 with before 10 and GST 20, 3B 20, 20, 21, 22 respective days. Who is going to take responsibility? Yeah, that is the thing. Accounting, they should be done. Cut off procedure to be done. How is it being calculated? Everything is important. The nature and extent of work to be performed by the user auditor regarding the service provided by service organization, depending on the nature and significance of the service to the user entity and the relevance to the other service of the audit. SS Limited is a company limited in India. The company is appointed Co as auditor of a Q as a CA who recently joined the firm, and they are appointed as an engagement partner for the first time. He understands that it is necessary to ensure that compliance of the independence of the audit team as per the standard of auditing practices, but he could not find the such any policy or procedure available with the firm in documentation form. Why do you think that the firm should have a policy and procedure to ensure the independence of the firm in every assignment? How does an assignment partner ensure compliance of independence and discuss the relevant standard of auditing? SQC, standard of quality control. It is a responsibility to every engagement partner to provide a detailed standard of quality control that is being followed in this office. Why? Why need to follow standard of quality control? If you don't follow standard of quality, it's what I see going to grab you. Question is there the peer reviews compulsory? No, it's not compulsory actually. Who need to do the peer review? Only those office will have a higher turnover. So low turnover office, do they need to do the peer review? No, they are not need. They have no responsibility of doing peer review. Then is there any issue? No. So now it's a water problem we arises here. The problem what we get here now is what is the standard of quality control we need to follow? That's the problem. It's not even a problem. No, no, it's a great problem. Example, you're going to an audit. What audit? Normal income tax. No, no income tax audit you're going for a person having a turnover of 1.2 crores. So what you will do in the audit? You should speak. That's what you know the quality engagement. A policy and procedure. What is the policy we have? First, identifying the client. So this is the client you said. Now you go and see the permanent working papers of the client and temporary working papers of the client. What is permanent working paper? It's an individual. Okay, PAN card, Aadhaar card, rental agreement. What is a client agreement and past income tax records? Everything in temporary working papers you go, past income tax records you will get, and what have been filed this year, and we have audit comments we have. Then you'll have an audit plan. What are the audit plans of previous years? When do you go for audit? How many days you conduct the audit? On first day, what you do? Second day, what you do? Third day, what you do? What are the comments you would have given to the management? What owner? And what the reply you got from them? Then after how you concluded it and who signed the audit and what are the and what is the mistakes that been found by there will be this will working. What is some correction will be made by the managing partner. That correction paper will be there, and this is mistake has been done by the working person, and this has been corrected. That is also part of the working paper. Then after finalize, the copy will be there, and both will be signed, and income tax will be filed, and audit working paper 3CD 3CB will be filed. That is also will be attached in the working paper. These are all things will give. So that comes to your point. These are the work. This is a policy of following having the working paper. This is the normal thing. Other than thing, external another point. One Excel sheet will be given, and audit tax audit checklist will be there. Audit debtors list, creditors list, name of the partner, and then MSME, who and other payments outstanding, how long the payment is outstanding, GST audit is done there or not. That details, everything, bit, every details will be attached there. You want to see that in this circumstances, what do you do? So this is what you want to think. It's not the small thing. It is a very big thing. You should think how can you do this great audit. Visualize it. So we are going there. We are seeing vouchers, purchase vouchers, sales vouchers. Then after BRS, bank statement, bank reconciliation statement. After seeing the bank reconciliation statement, what are you going to do? So purchase agency, sales you have seen, bank reconciliation sales. Next in the cash books, cash receipts. Every cash receipts you will see vouchers. Inward there will be no payments because the cash sales no nothing. Cash pay purchase payments no there will be vouchers. Then after everything is done. Mostly audit is done right now. Then you got receivables, payables, salary, PF payment, ESI payment, then apply gratuity, bonus payment. That's it. The expenses been done, everything. Then going for accounting standards. What is inventory? How is it valued? Fixed asset, depreciation. You'll see. Then after amortization of goodwill, amortization of intangible assets. You'll see. Then after you will see what is the capital loan has been repaid. What is the schedule of loan repayment. Then after partners loan, how many interest been paid within the partnership agreement and what as per the partnership act. You see, these are all the things you'll be seeing, and you see, you'll put checklist. On checklist, I have seen this, I have seen this, on this date, I have seen this, and comments over it. This is the comment. Running comment will be there. The big sheet will be there. The running comments. So they have seen this on this day, and this is my opinion, and this is the question I have. This question I have. You'll say, and the question column, you'll set the management, this entry, this date, this is voucher, this is the photo of the voucher. I have a dispute. Please explain. This way, you will report it to them, and they will see through, and they will give you a comment. Okay, this is correct. This is wrong. Something they will say. You either record it in voice or keep it in the voice note, or you will just convert it into text and put it in there. That will be the working paper of the evidence what you've done. So this is a plan, procedure, collecting evidence, obtaining conclusion, putting in opinion, forming opinion, give some other matter paras, you give some points. These all will be the audit evidence so that sometimes in most audits, small audits, you can do 100% audit not issue. But when you go for a high turnover, you can't see 100% audit. Rather, you will see vouchers of 15% maximum. 5% to 15% the total vouchers you will see. Then there's a material misstatement, deduction error may occur. So how are you going to prevent the deduction error? That is the main question. So SQC, the quality of control of the firms and performing audit and review of historical financial information, other assurance related service engagement. The firm should establish policies and procedures designed to provide reasonable assurance that firms and personals and other applicable subjects to independence requirement, including experts contract by the firms and network of firms personnel. Maintaining independence with the required by the code. Such policies and procedures should be enable the firm to communicate the independent requirement in the personal, whether applicable and other subject to them. I identify the evaluate the circumstances relationship that create threat to independence. Yeah, some person may go to audit there, and their client may provide some favorable food, favorable things like buy a cell phone, or if he has a laptop showroom, can give discounted price of a laptop, or if you have a jewelry, they may not charge you some that damn charges only GST alone, not other charges they waiving of it. Mm, Um, cab services, some kind of favor has been done to the client. So take appropriate action to eliminate those thread and reduce the acceptable level to applying safeguard or to consider appropriate to withdraw from the engagement. If such kind of thing is being forced by the client, when the independence has been affected, usually they give you, but it's not fair that you going to reduce your independence. You are not going to spoil your independence, sir. You give you that's your your big heart you are giving, but I can't sign such thing. The straightforward is very important. Further, section 220, the quality control of audit of financial statement, the engagement partner shall form and conclusion and complaints of independence required to apply the audit engagement. In doing so, the engagement partner shall obtain several relevant information that form and thereby applicable network to identify the evaluated circumstances and the relationship to create threat to independence. Evaluate information on identified breaches. If any of the firm's independence or policies and procedures determine whether they created threat to independence of the audit engagement and take appropriate action to eliminate such threat and reduce them to an acceptable level to acceptable safeguards. If the considered applicable, withdraw from the audit engagement, and this withdrawal is permitted from laws and regulation. The engagement partner shall promptly report to firm of inability to resolve the matter to appropriate action. Hmm. TP Limited is a listed company engaged in the business of manufacture of kids garments under the brand name RIMM and Mr. Anand Associates firms chartered accountants or appointed as statutory auditor of the company for the financial year 23-24. CER is looking after the audit of the company. During the audit, CER observed that there is a number of notices received from the GS department, income tax department for various issues. Further, during the plant visit, CER observed that few children laborers are engaged in some of the activities. In response to the observation of CER, follow the procedure of investment section 250, consideration of law and regulation of the audit financial statement. According to the CER, provide section 250 provide that there are no non-compliance with laws and regulation and under the revised code of ethics or one of the same. Do you agree? If not, give us comments. First thing is, even though they are not following the rules and regulation, you find this kind of things. It's a responsibility of you to report to SA 250. You should report to the management. Sir, what is this happening? Give your comments on it. Laws and regulation are followed. As that reporting of fraud, you need to follow the rules and regulation. If not, management have not given a report properly. Just qualify the report or give an adverse report stating so. Give photographs of this employee's been working on this date or this time and take the photo evidences of this example, the attendance register photocopies. Yeah, that should be very good. Attendance photocopy. This many register is there. This register, this many days, this has been done. Everything get collected evidences and put into a pack and give to the management. So this evidence is stating so that you have minor child as an employee. This is against the child protection law, and you will be prosecuted if not. So what is the remedy? You can ask it. Management says, sir, okay, this is it's wrong. You're doing is wrong. Just put in the report, qualify the report, and give to them. That's it. If they provide you some reason, if they stop their employee on some day, on that day and proper remuneration properly paid to them, okay, you can leave it. But it been continuous and no response is received from their side. Qualify the give adverse report and at the same time report to the report to specific department that labor have all this evidence given to them that this is happening. It's a responsibility of them. That's it. Audit planning. In the audit plan of T Limited, the audit partner, you want to highlight the source of misstatement arising from the other than fraud due to the audit teams caution them, identify source of misstatement. SA 540, evaluation of misstatement identified during the audit. And an inaccuracy in collecting, an inaccuracy of processing data by which financial statements are prepared. Omission of amount which may have been disclosed. The accounting estimate incorrect due to the overlooking a clear misinterpretation of fact. Judgments of the management concern accuracy accounting estimate that's auditor consider unreasonable. Yeah. Selecting selection of applicable accounting policies of the auditor considers inappropriate. These also comes if it happens, then you should say data is inaccurate. So processing false. Data is of inaccurate, no? Financials inaccurate. Some data is not even entered. That is a misstatement. Yeah, then accounting estimate is wrong. What should be then accounting estimate is wrong. Then judgment by management concerning accounting estimate that auditor consider unreasonable. Sometimes they will do they will increase the asset Over revaluation, asset rate of the building will be 2 crores, they will give 15 crores because of as per the market price. But the reasonable fair value price is only 2 crores. Such a overvaluation. Management will take judgment that won't be reasonable. Selection of proper accounting policy that the auditor consider inadequate. Sometimes um, inventory like tools will be added into the inventory. They want to loan, so they will think I will pay the tax, sir. So please add increase the inventory. Yeah, you can't. The inventory should be valued in fair value. You can't, on the case of sake of loan, you can increase the inventory value. On the sake of any other requirement, you can't reduce some liabilities. That kind of things may happen. That's what. Third, RC and chartered firms or chartered accountant has not received terms engagement and obtained confirmation from this client for last 5 years despite changes in the business and profession environment. Please allocate the circumstances that may warrant and revision in terms of engagement. So, not revise the terms of engagement and obtain confirmation from this client for last 5 years despite of changes in business and profession environment. So, the client's profession environment has changed. What you should do? You should say to the management, sir, when you increased. The work is increased. Terms and conditions may be increased. I need a fresh engagement letter. You can ask. If not provided, you see whether your independence is going to be affected. Quality of work, your independence is going to be affected. If you feel so, remove yourself from the engagement. That's it. Is it to agree in terms of audit engagement? Auditor should not does not send auditor may is it not to send a new audit engagement letter or other return engagement each period. However, the following factors may make it appropriate to revise the audit engagement letter to remind the entities existing terms. And identifying the entities misstatements, misunderstanding of objective and scope of the audit, any revised special terms of audit, a recent change in senior management organization structure, significant change in ownership of the enterprises, significant changes in nature and size of the entity business, significant change in legal and regulatory requirement, change in financial reporting framework adopted in presentation of financial statement, and changes in reporting requirement. So, objective they didn't understand. You need to say some special audit is going to be conducted. You should say them. So we need to change the engagement. Ownership of them changed. Then we should give. Senior management has changed. We should give a new engagement letter. The organization became 100 crores to 10,000 crores. Definitely, we're going to see the size is increased, work is increased, we need new payments. Sorry. Change in legal regulated requirement from service tax to GST is gone. New income tax 2025 is going to come. Totally changing. So, we need to go. Change in financial reporting framework. Sir, Schedule 3 is going to be totally upgraded. So, lastly, we are using Schedule 3, but a normal NDA, a normal AS. Now, you are listed company NDAS before change. Change in reporting requirement. Sir, lastly, you are NBFC. Now, you are banking in sector. You have study electricity sector. You are studying home. Or you have a different segment, international segment, global finance company. You are having more complex transaction. Then we need to follow different sector. That's the thing. Now, audit of the hotel grade stay limit. The auditor want to use an analytic procedure to substantial procedure to respect of the room rental income as well as the payroll cost. Guide them how we done. Substantial procedure. What you want to do? You want to see how many rooms are there, and you can see get the register. At the register, we will see each room or the vacancy date and it has been occupied, and that data and the rate of the room you can get it from the master data. Then you can compute the what is the actual income being generated. Then after that, you can verify it with the sale income. That's it. According to SA2 for analytical procedure, this some of the cases when unsophisticated predictive model may be effective as an analytical procedure. In the case of payroll cost, number of employees, alternate sheet you can get, then after multiplying the salary, basic salary, agreed upon salary, and what has been payment to bank, PF, ESI. Employees fixed rate payout through the period and possible for auditor to use a data to estimate the total payroll cost and period of high degree of accuracy. The room rental income hostel different types of analytical procedure provide different level of assurance. It is provide pervasive evidence and may ultimately need further verification means detail test of detail providing eliminate the appropriate verification. Um, Good Bank Limited is intended to advance to a customer based on the stock and receivable to appoint you to conduct a periodic review of status of stock and review of the borrower. Please start a suitable program for verification. So stock verification. So reason for obtaining the loan, collection of information, what is the receivable age-based analysis, then after stock age-based analysis. Standing and reputation of the business authorized more memorandum of article association to borrow money, examination of statement, stock and receivables, whether the inventory is physically verified by the management or not, calculation of relevant ratio, for example, sales to average stock, cross check the goods inward and outward register held by the purchase and sales, use export advice whether required, any of the case theft of goods by employee, etc. Receivable calculation average collection period determined by the responsibility. Percentage of bad debts in the respect of receivables. Whether any receivable includes a party which related to consumer behavior unreasonable. Calculation of various ratio. Checking the frauds in receivables. Discuss the impact of uncorrected misstatement identified during the audit of auditor's response. Same. SA 540. Roughly. Evaluation of misstatements identified during the audit. Auditor has to consider the impact of identified misstatement of the audit. Now, whether basis of identification misstatements of original auditor program need modification. Yeah, that's in misstatement now. Original audit report are in change accuracy. Then there may be some mistake which is identified or collected during the audit procedure by the auditor, but remains uncorrected. Auditor has to evaluate the impact of the uncorrected misstatement on the financial statement. Okay. SA 320 materiality in planning and procedure of performing audit. Aggregate the uncorrect misstatement. In the planning, we have audited that, and now that deduction error is done, that is a big thing. Significant misstatement identified by the auditor, including net effect of uncorrected misstatement identified during the audit of previous period. Auditors best estimate of other misstatement which cannot be specifically identified that is appropriate error. Auditor had to demonstrate whether the incorrect statements are material or individual, whether considered together or each other material accumulated during the audit. So impact of misstatements. If aggregate of the uncorrect misstatements, then the auditor has to identify appropriate material level. If the auditor determines that aggregate uncorrect misstatements causes the financial state information to material mistake, he should consider requesting management to adjust the financial information or extending the audit procedure. As the event management may want to adjust the financial information known as misstatement. The adjustment of financial information may involve, for example, applicable appropriate accounting principle. The adjustment in the okay. In addition to the appropriate disclosure, adequate disclosure matter, if the management refused to adjust the financial information, the result of extending audit procedure do not enable the auditors to conclude the aggregate of uncorrected misstatement or non-material. The auditor would express and qualify adverse opinion as appropriate. Okay. Further, the auditor shall communicate to those other governance uncorrected misstatement and affect that may individually or aggregate may have opinion in the auditor report. Auditor shall request a written representation from the management whether appropriate change charge of the governance and they believe affecting uncorrected misstatement immaterial individually aggregated to the financial statement as a whole. The auditor of the garment manufacturing company of the last 5 years, you are observed that the new venture of online shopping has been added by the company during the current year. As an auditor of a factor, consider you to formulating audit strategy of the company. Gentle factors we consider the formulating audit strategy. Preliminary work to be done, adding real audit work, changes legislation, audit or auditing standards of guidance, analytical review, available management accounts and other management information related to accounts, change in the business and management, changes in accounting statements, deadlines established in supervision of audit work, use of rotation, testing, verification. Specific factors on online shopping. Auditors should also obtain understanding of information system, including related business process due to the new venture of online shopping, including following up ideas. The class of transaction entities, operation, and significant financial statements. The procedure, both the information technology and manual system by which the transactions are initiated, recorded, transferred, central ledger, and reported to the financial statements. The related accounting records supporting information specific accounts that financial statements that use initiate record process and report transactions. This include correction of incorrect information, how the information is transferred to the central ledger, how the information system capture the event and conditions, and other than transaction that is significant to financial statements. Controls surrounding journal entries, including non-standard journal entries used to record the non-recurring unusual transaction adjustments. Thank you.